I'll give you a hint. More often than not, it's the myself bit. But equally, and it's one of the reasons I differentiate between markets and method, is because markets is about understanding your markets, doing your analysis, understanding what phase it is, what environment it is. Is it trending? Is it consolidating? Is it transitioning? But then also ensuring that your method is aligned with the markets, right?
Sitting down today with Paul Wallace. He's a good trader. I definitely love to talk to for his for sure experience. Also a background in military, went to trading afterwards. So a lot of good lessons there to learn about mindset. Paul, good to have you here on the podcast. Welcome back again. It's been a few years we spoke, so cool to have you here again. And looking forward to talk trading this time.
Yeah, nice to be here again, Etienne. So nice to see. It's been I think a couple of years since I was last on the show. It's been an eventful couple of years, both personally and globally, I would say. So there's plenty for us to talk about today.
I mean, give me a summary of what's been going on since we last spoke, maybe 2 or 3 years ago or so. We'll leave the interview link in the corner so people can check it out, but tell me what's been going on since we spoke.
As I said, it's been a rather eventful couple of years. So I know there's lots been going on in the world, but personally, I've still been still sort of trading, still coaching, still sort of helping other traders. But also, I kind of personally, I had emergency surgery about 2 years ago for cancer. So basically, I had about 6 months out of the game. Just because basically I had to focus on surgery, recovery, going through chemo. But I'm gladly about 2.5 years clear now. So that was quite eventful. And interestingly, there are kind of elements of kind of the sort of resilience and mindset work I do with traders that actually probably helped me go through that particular period or that particular chapter. But it also helped me get very clear on what I particularly love doing, okay, and what I particularly enjoy about. So, trading being the kind of maiden one on a kind of professional level. So, it has been a rather eventful couple of years.
Yeah, I mean, tell me more about this. Is having a health issue like this the same as like going through a big drawdown or something? Is it the same kind of feeling, or is it maybe? I'm guessing it's worse than that. But tell me a bit more about how you see it and how resilience comes into this.
Yeah, it's a how would I describe it in terms of a trading element? So it was it was a bit of a shock to me. All right, without wanting to sort of share too much with people. They're here to talk about trading, but literally, I felt sick on the Saturday, went to hospital. On the Sunday, I got told, you have cancer. On Monday, I met the surgeon, and on Tuesday morning, I was in for what should have been 2.5 hours, turned into 8 hours on the slab. So, kind of the thing you need to take about it is that your life can change, in the course of like a 48, 36, 72 hour period, and you should always be prepared for change. Okay, and it's like what John Lennon said. Life's what happens when you're busy making plans, and it's the ability to adapt to kind of complete huge changes. Complete huge changes overnight. Your ability to adapt to that, to ability to recognise that, to be very present, to realise, this is the here and now. Whatever you kind of might like to wish or think about is of no relevance anymore. You have to deal with what is right here, right in front of you. And I suppose in a trading way, that is a little bit about, you can have all the ideas and the dreams and the plans you want, but actually, you're being present in the moment and trading what you see right in front of you and dealing with that, rather than being kind of distracted by, ideas of wealth and fame and fortune, etc. And actually, it's just really dealing with what you hear today and just making the most of today, and then letting the future take care of itself in that particular sense. So I suppose that's kind of a quick insight into some of the parallels between dealing with a major event like that and actually sort of dealing with your trading career as well.
It's interesting. The other thing I'm thinking is like negative thoughts. Like you probably have thoughts about, oh, it's not going to work, or when you trade the same thing, oh, it's not going to work out. I'm still going to be losing money and stuff. How do you deal with those thoughts over time?
Yeah, totally. In both trading and dealing with a major emergency like that, you hear performance coaches talk about it all the time about you just have to focus on controlling what you can control. In trading wise, I've always said to people that you control what you can control in terms of, you can plan your trade your plan, manage your risk. Those are the three things that are within your control, and you should focus on controlling them every single session that you sit down to trade. Once a trade is triggered, anything can happen. All right, it's one of Mark Douglas's, beliefs, etc., that you learn if you read Trading the Zone enough times. But it is a case of, once a trade is triggered, anything can happen, and you should be prepared for anything to happen. That's why I constantly bang on about managing risk, etc. And so it was the same with dealing, with the experience I had, in terms of you just have to focus on what you can control, all right? Do the very best at what you can work upon, just basically keeping yourself in positive spirits, recognizing what's going on. And, it's a fantastic opportunity to demonstrate physical, mental and emotional resilience. And if I blow my own trumpet a little bit, if you were to speak to my partner, my family, my friends, etc., they were all really, really surprised at how strong and resilient I was and how I dealt with it. Whereas actually, I just, it's what I do every day. You just deal with what comes in front of you, all right? And you put as much energy you can into the things that you can focus on and work on. And the other stuff, you have to realize that, there are elements you have to accept. And so you just basically focus on what you can do best. And that's the same for, I suppose that's the same for trading, dealing with cancer, running a business, being in a relationship, any kind of situation is probably good sound advice and to sort of to take forward.
Is that mental toughness something that all traders eventually develop and they all kind of build that up? Or is it something you have to, I guess, deliberately work on and really kind of put in the effort to build it over time?
I think it's a skill that can be developed. There are probably some people who are more naturally resilient than others, but that's probably part of just their life journey before they sit down to trade. My early days were as an officer in the military, okay, as a battle manager for the Royal Air Force. So that's part of the gig. But then when I look back on my life, I realized I had always spent my time in performance environments, whether that's the military, whether that's business and sales, whether that's in sports, whether that's in trading, whether that's in coaching. And so, if you're immersed in those environments by their very nature, you will experience events that develop your, resilience, your mental toughness. And I think it's a skill that, like any other, that you can develop, you can work upon. I don't think, if I look back and think about kind of all of the great traders I've either worked alongside on a trading floor or coached or mentored, they all have degrees of mental toughness, and it might show itself and manifest itself in different ways, but undeniably at their core, they have that resilience. And once again, I think that's just a great skill for anybody in life to have, especially in these rather eventful days we find ourselves in.
I know you mentioned also the fact of like you got to be able to adapt to the market and adapt to like what's going on. I see a lot of traders who are maybe too fast to change. Like they switch up their strategies really quick. They try to change the rules, try to change things really, really fast. How do you kind of maintain the flexibility but keep the structure at the same time? Where like you can tweak things but not go too fast or too beyond the scope of what you need to tweak.
Good question. All right, it's a good question, and I would say there's probably layers and levels to that. So if I give maybe a personal experience from one of my trades this year, so I did well at the start of this year by shorting sterling. Okay, as part of my own FX model, I'm always looking for the STAM, strength, trend, momentum. And coming into the start of the year, sterling was weak, and I was doing well from shorting sterling pretty much across the board against everybody else for the first few weeks of the year. I generally had a belief that because of, let's say, the sort of the trajectory of the country based upon the sort of the incumbent government administration, that we were likely to see continued sterling weakness and also the possibility of a recession further into the year. And so, I was very happy to have that bias of being short sterling. And for the first few weeks of the year, that worked really, really well. But actually, things changed. Okay, things changed, and this is the kind of being having to be able to adapt to basically what the market's telling you. Um, try to get across to people that the market is always communicating to you. The market is always communicating to you. It's your job to learn its language. All right, it's your job to learn its language. That doesn't happen overnight. All right, that happens through experience, through years of experience. And as there's that old kind of military adage of, good judgment comes from experience. Unfortunately, experience tends to come from bad judgment. So even though I had a bias, to be sterling short, certainly, well, the price action started to change. The price action was not reflecting that. Furthermore, of course, as we got into the latter half of January and into February, everything was about the Trump inauguration and the changes there. And so basically, sterling, which has been strong, if you look at a chart of it, sterling has been strong the last couple of weeks. It is strong because of Trump and US dollar, not necessarily because of any inherent strength within the UK or sterling. But once again, you have to trade what you see. You can have lovely ideas and dreams of what might be, but ultimately the market is communicating to you. It's your job to learn its language, and you have to trade what you see in front of you. And you can have a bias, and when your bias and the price action lines up, that's fantastic. That's when you should be trading with flow. But when they don't line up, or when it's changing, you have to change. The market's not going to change. You have to change. And so having a constant debrief facility. And I've talked a bit about one of the elements of my success is understanding the OODA loop. I don't know if you would know what that is, Etienne, but it has been one of my factors in my success. And I probably just do it naturally because I've been doing it for 30 years, etc. But the ability to adapt comes from you constantly debriefing, constantly sort of having those feedback loops and not ignoring them because it's not telling you what you want to hear, but recognizing in this moment, just being very present and recognizing that you have to trade what you see in front of you.
How do you actually debrief either trades or periods of time in the market where maybe you didn't do so well, but you want to go back and learn lessons from it?
Good question. So you should be debriefing every trade. All right. You should be debriefing every day. You should be debriefing every week, every month, every quarter, every year. Now, on an intraday, if you're trading intraday, if you're let's say you're a scalper, all right, and you might be taking 10 to 20 trades a day. Your ability to probably debrief every single one of them in terms of a full in-depth debrief is probably unlikely to happen. So you have to start picking out what were your 3 top trades, what were your 3 worst trades. But even in each individual trade, once it's clicked, you should be very, very quickly assessing, did I trade my plan, or did I plan my trade? Did I trade my plan? Did I manage risk on that trade? Okay. Did you do those 3 elements that you can control? Okay. That is all about scoring yourself on execution. All right. I score myself on execution, performance, and confidence, but execution is the one. Right. If I'm not scoring highly on execution, that's when I need to sort of take a time out. Okay. Take a bit of a bigger debrief. All right. Execution is key, especially if you're going to be kind of like intraday scalping. In terms of that debrief is, as I said, my background was the Air Force, right? They spend more time debriefing missions than actually flying the missions. Okay. They go into every nut and bolt of it because they are trying to extract maximum value out of that session. For traders, you've paid for that trade in time, money, energy. It is on you to basically to be able to extract that as much value as you can from that trade, regardless of the outcome of that trade. I think one of the things that helps me with that in terms of addressing the changes in the market is that I have plugins. Okay, I have plugins for I've got about 4 or 5 different trading platforms, and I have plugins that do a lot of the work for me. But I still do my weekly analysis by hand every weekend for about 90 minutes, because I've learned over the years that when I physically do it and physically go through the charts, my connection with the charts and the markets is much, much better. I notice changes far better, and I also find it's just part of my best practice, as in it just gets my head in the game, prepared for the week ahead, which means I am more more efficient, effective in my time, in my use of my time, energy, and resources for the week ahead. So that kind of 90 minutes, maybe 2 hours a weekend, is a big part of keeping on top of what's going on in the market, keeping on top of my analysis, but also giving me the chance to sort of debrief how the week went and what do I need to work on going forward for the week ahead.
Tell me about the importance of reviewing also these winning trades, because people will say, okay, it's only losing one, you have to go back and review when the winning ones are good. Do you actually go back and review all the winning trades also?
Yeah, absolutely. Absolutely. Rightly, wrongly, I believe when you review your trades, okay, you are reinforcing the learning points, all right, from that trade, the good, the bad, and the ugly. It's almost like your mind is just revisiting that trade. So, my winning trades, I want to debrief, but also what I'll also have is I have like a PowerPoint slideshow, and I just take screenshots of great setups I've taken, or great setups that I've missed because I wasn't at my screen. Just great setups. So I'm just constantly reinforcing to my mind, this is what good looks like. This is what good looks like. You do nothing. You do nothing unless it looks like that. That is what you're looking to do. So reviewing good trades is important because you want to be reinforcing the kind of the best practice, okay, for your own trading business. In the same way, especially, you're a human, you're learning a new skill, you're learning a new craft, okay? If you're manually trading, or even if you're, sort of doing it automated, you're going to experience the good, the bad, and the ugly in your trades. And those bad and ugly trades, lots of people will hide away from them because they just don't want to confront the financial pain, the emotional pain. Whereas my view would be, you've got to face up, all right? You've got to face up. You've got to, dig into those kind of losing ugly trades, because that's almost like a gold mine of data and information about your trading, but also about yourself and your next level of success. And as traders, we're always evolving to our next level of success. Your next level of success is on the other side of that pain and misery from the tough trading conditions.
One thing you talk about a lot is the 4 M's of trading success. Can you maybe walk me through what these 4 M's are and kind of why they matter in trading?
Yeah, sure. So, quite simple. 4 M's is basically markets, method, money, and myself. And basically, the reason I think they're important is because in my own trading and in the trading I've worked with others, when traders are on top of those 4 M's of trading, that is when they tend to be operating at their best. And if you're having a difficult time in your trading, then the first debrief point should be, of markets, method, money, and myself, which one is out of kilter, all right? Which one is, it might be more than one, all right? I'll give you a hint. More often than not, it's the myself bit, but equally, and it's one of the reasons I differentiate between markets and method, is because markets is about understanding your markets, doing your analysis, understanding what phase it is, what environment it is. Is it trending? Is it consolidating? Is it transitioning? But then also ensuring that your method is aligned with the markets, right? You might have the best trend following method in the world, right? But if markets are consolidating or they are reversing or transitioning, doesn't matter how good your method is, you're gonna struggle, all right? So you need to have your markets in alignment with your method. You need to be ensuring that your money management is on, is basically top level, okay? It's the best practice, as in, if you're not managing risk, you're roadkill ultimately, all right? Nobody I have not worked with or seen in all my years. I've not seen one long-term sustainably successful trader who has not been managing risk. And then the final part is about managing myself. Okay, about knowing yourself and knowing the space you're in, knowing when you're in a good space and watching yourself so you're not overconfident, all right, and get yourself in trouble. But equally, know when you're not in the best of space, when you're in a bit of ebb, and having the confidence to recognize either I need to change myself or I need to sort of pull my horns in and not trade. If you're tired, okay, if you're tired, if you're struggling, if you're going through chemotherapy, going, trading when you're going through that is not a smart move. I didn't. I just literally cut it out. So it is that kind of understanding your markets, understanding your method, understanding money management, and understanding, yourself, myself, and those four elements. As I say, when I see traders doing well, it's because all four of those they're on top of them. Okay, they are managing them. They are managing those four M's well.
Is there one specific that you see traders often do wrong, or is it like all over the place? They do one wrong and then it kind of screws up everything?
For new traders, I would say they are overconfident and underskilled, and that's a dangerous combination. They're overconfident because optimism bias is in play. They're excited. They're learning new skills. Okay, they're developing. They're growing. And they of course they are very outcome focused. So they're thinking about all of they're thinking about when they're going to buy their first speedboat and all that kind of nonsense. All right, but the thing is, they don't have the skills. Not only that, they don't know what they don't know. So they are operating at a unconsciously incompetent in level. And so for new traders, that kind of combination can be challenging. And part of that combination is driven normally, not always, but normally I find by external factors. So they come to trading because they want a change in their life. Either they hate the job, they hate their life, they hate the relationship, they hate where they're living, etc. And they want change, and they're looking to use trading as the vehicle to bring that change. And that you're only successful at trading if you love trading. All right, ultimately, long term, you have to love it. You have to love the markets. You have to love the trading. And so those external factors, that's what they bring people to trading. But actually, it's not. That's not enough to that might fuel you to begin with. But when you start having challenging trading periods or struggling, that kind of motivation ebbs away. Right? It tends to ebb away, and that's why people, they set themselves with kind of foolish expectations, and it comes back to bite them in the backside. And so if people call me up and they're unhappy in their, they're happy in their life or unhappy in their job, and think trading is going to get them out of that, they're always a bit surprised when I say, actually, what you want to do, go and change your job, all right, change your life. What you might find is that actually you might be in a happier place and don't feel the need to trade, or you might be in a happier place, which means that your ability to trade will probably improve anyway because you're coming from a better place rather than coming from a place of desperation and need, because that rarely ends well for a trader.
What are some of the myths you think that traders believe that just aren't true, or some advice maybe that people are told that just doesn't make any sense for trading?
Yeah, people who are told that you shouldn't use stop losses in your trading is one part, right? That's nonsense. Okay, that is absolute utter nonsense. As I said earlier, if you're not managing risk, you're going to be roadkill. Um, I think there's kind of also, I would look at that more in terms of, there are lots of trading adages out there, so that people spout. So things like cut your losses, ride your winners. Everybody hears that. Everybody can talk about that. Everybody kind of nods at it being sage advice. But the reality is, well, actually, how do you do that? How do you break that down? That might be the outcome to ride your winners and cut your losses. But actually, how do you break that down? And then you're breaking it down. I always use like sports coaching, like OPP. You've got an outcome, but what are the performance levels I require? And then what's the process? What is the mechanics? What are the mechanics you have to have in place to basically to be able to ride your winners and cut your losses? Okay, so yeah, so as I said, there's kind of adages that people will spout, but actually, you need to dig a bit deeper, right? You need to dig a bit deeper, and you need to turn it into a performance level and a process, which is just really a series of mechanics that basically help you turn an adage into actually something concrete that you can, that you can work with and trade consistently with.
I mean, once you're successful in trading, once you already have the habits and things in place and you've built mental toughness, how do you stay motivated to kind of keep going? Is it just a fact that you just love the market, or is it something else that is motivating you to keep going?
So interestingly, when I went through my cancer journey, lots of people said, "Oh, clearly, Paul, trading involves a bit of pressure and stress. You're going to give that up, etc., aren't you?" I was like, no. I love it. All right. I absolutely love it. I never get bored of looking at charts. Okay. I never get bored of learning about it. I never get bored of working on it. Um, my kind of, the picture on my Twitter feed, okay, it probably sums it up best is like, um, I am like the late great Tom Sizemore actor in the movie Heat, which I appreciate might be a bit before many people's times, but he has a line in that movie that says, for me, the action is the juice, and that line has always stuck with me. And in many ways, for trading, it's the action is the juice, as in actually looking at being my best, working to be the best trader I can be, always um, always just trying to fight against complacency, fight against lazy because you're human, right? And actually enjoying the fact that every day you have to bring your A game. Every day, you are against the best brains in North America, Europe, Asia, etc., Africa, South America, and actually you need to bring your A game, and you need to basically to be the best you can be. And I find that kind of maybe that's an ex-military thing. I don't know. But it kind of it keeps the blade sharp and all right, and it keeps me always progressing and moving forward. And so, as I said, yeah, for me, the action is the juice, and yeah, I love that. All right, and I don't see any reason why why that would change in terms of you take so many years to acquire the skills to be a great trader. Okay, and why would it takes that is a challenging journey all the way. Well, you never really get there, but once you're at a level, why would you turn away from that? So yeah, for me, the action is the juice. I've even got a t-shirt with that on now, so just to remind me.
Tell me where people can find you and connect with you after this podcast.
Yeah, so I have a Twitter at FX Trader Paul. I'll send you a couple of links, but I have there's a resource page with some free resources. So so I do a weekly market update. Okay, that's free for people to attend. I do a trading podcast with my Irish great trader mate, and I also I used to do a course for veterans, basically giving them an introduction to trading. That's now free and people can access that. So tradingbeliefs.com/resources. Go to that. There it's all there. People can see that and access that, or even a link tree, /trading beliefs, all one word. They can basically access there. Okay. And as I said, there's quite a few free resources there. People can make themselves available, help themselves.
Yeah, you definitely do a lot of good work out there, so people can follow you. We'll put the link below the description. People can check it out there directly. And Paul, it'll be good to catch up in the future. Talk to you again, and look forward to see where you're going with this. Definitely.